Welcome back, guys. Hope you're having a good morning so far. The SGX Nifty is indicating a good start, 30 points higher, but plenty of stocks to talk about and a lot of positives in terms of earnings. So let's get straight to it. Lupin delivered a very good set of numbers, actually. Ekta's here to tell us what went so damn right this time around. Ekta, over to you.
Thanks for that. Well, yes, Lupin, in fact, came out with what was a good set of numbers. So the revenue was up around 14%. The street was anticipating a 7% growth this time. Margins came in at a multi-quarter high, so they improved to 13% versus 6.9% year-on-year and versus 12.3% on a Q-on-Q basis. The street was anticipating 12%. So there's a marginal improvement which came in on margins. Profit 235 odd crores. Street was anticipating around 156 crores. North America, $175 million in terms of sales. The range was wide for the US sales, but nonetheless, for some analysts, it was largely in line with estimates. But the street was anticipating anywhere between $175 to $192 million. Nonetheless, the US markets did deliver in terms of margin improvement for the third consecutive quarter. India was up 9.4% year-on-year. Growth markets was up 15.1% year-on-year. API business was up 46% year-on-year. So all of the other segments did deliver for Lupin this time. It'll be interesting to see what their guidance would be on key drugs such as Spiriva generic. That would be a key catalyst. But nonetheless, numbers look good.
All right, numbers look good. The other set of good numbers that came through was from Apollo Tyres. Now, there are no surprises here because the entire tyre industry has done very well. But this time around for Apollo Tyres too, very strong earnings coming through. Margins are up 480 basis points year on year because of lower raw material costs and operating leverage. Revenue growth was also quite healthy, actually, a 12% growth in their top line. The EBITDA was up almost 60%, as you can see on the screen, and good growth in margins. Profit after tax coming in much higher than last time around. UBS maintains a buy. Their target is 370 rupees a share. They say the margin beat is very similar to peers, while Morgan Stanley has an overweight rating with a target price of 400 rupees. They say the beat is largely seen in the standalone business, while the European business was in line with expectations. But let's not forget that Apollo Tyres is already sitting at a fresh 52-week high. So perhaps a lot of the good news is in the price already.
All right, stock's done quite well. MRF, of course, started that with spectacular numbers, and other stocks also rallied after that. Well, thanks, Sonia, for that. Now, cement in focus. Birla Corp and Nuvoco reported numbers. Surabhi's got details on both. Surabhi.
Thanks so much for that. So first on my radar is Birla Corp. Now it's a good set of numbers. The numbers were better than the poll. The revenue was up 2% when you compare it to the CNBC TV18 poll. Came in at 2462 crores. Margins were 60 basis points higher than the poll. Came in at 11.1%. Now the key positives are that the losses at Mukadband have decreased, and the management has also said that the unit has turned positive. Now, there's significant improvement in EBITDA per ton when you see it sequentially. The EBITDA per ton has come in at 615 rupees per ton, and if you exclude Mukadband, it has come at 689 rupees per ton. The net debt in FY23 has increased, however, by 261 crores. Next is Nuvoco Vistas. It's a pretty inline set of numbers. There is sequential improvement in EBITDA margins. They've come in at 13% versus 10% in the quarter gone by, and it is expected to improve further from here on account of lower costs. Now, EBITDA per ton has also improved quarter on quarter, came in at 732 rupees, but it is still lower when you compare it to Q4 of FY22 when it was 781 rupees. Now, there's reduction in net debt. The net debt has reduced by almost 750 crores from the December quarter, so that's a positive as well.
All right, Surabhi, thanks a lot for that. Looking at a couple of other result reactions today as well. We start with Hatsun Agro. Weak set of numbers coming in. Muted margins on account of dairy inflation. We've been talking about milkflation, that's a new word here, right? And seen a 310 basis points decline in their gross margins. Revenue growth of 10%, also nothing to write home about, given the fact that the company has been expanding its markets and expanding its product range as well, and increasing the prices. So 10% revenue growth is also below expectations, as a result of which the EBITDA has fallen by about 2%. Margins have come off, and the net profit on account of further higher tax rates have fallen by about 40%. Eveready, however, sees some green on the stock, primarily on account of strong revenue growth and their losses narrowing. It has already seen a big rally, but this time around in the fourth quarter, revenues have increased by about 18%, whereas the net loss of the company has narrowed from about 40 odd crores to just under 14 odd crores.
All right, Mangalam, thanks very much for that. Now, Castrol and Rain Industries are next in focus. Sonal has got details on both. Sonal, hi, morning.
Good morning, Prashant. Let me start with Castrol, where revenue growth was decent but not that strong. Revenues went up by 5% to come in at 1294 crore rupees. But their operational underperformance continues yet again. Their EBITDA was down 7% and margins declined almost 300 basis points, leading to a profit decline of 11%. The company says this performance was impacted due to inflationary pressures, and that is something impacted margins. Rain Industries also weak set of numbers, profits declined, and so did the margins. Expect these two stocks to be in the red today. Okay, and you take care. Thanks, Sonal, for that. Well, let's move on. Reema is also with us. She's tracking Nazara Tech and Latent View. Reema, how did the numbers look?
Well, Nazara, it's a good set of numbers. Year-on-year revenue growth has improved by 65%. EBITDA margins have improved to 9.4%, and the company has clocked in a profit of 2.6 crore. They've also achieved their FY23 guidance. For the full year, the company has achieved a revenue growth of 75% versus the company's guidance of 70 to 75%, and they've also achieved the EBITDA margin guidance of 10%. They've also achieved a milestone. Annual revenues have now crossed 1,000 mark. So it's a good quarter from Nazara Tech. Latent View, on the other hand, is a bit subdued. Revenue growth at 20% year-on-year. EBITDA margins have fallen down sharply to 21.4%. Profits are down 4%. So I'm going to go with red for Latent View Analytics purely because of the margin miss. Look at the way the margins have declined both quarter-on-quarter and on a year-on-year basis. Margins for the company used to be closer to 30% on an average, and it's come down to 21.5% due to increased employee payrolls. They organized some events, so there was an increase in costs associated with the events, and plus revenues too were slightly lower than I think what the company was anticipating. Back to you.
All right, thanks a lot for that. So let's just get down to all, the stocks in focus. The positive ones are Apollo Tyres, Lupin, Birla Corp, Nuvoco, Vista, Everready Industries and Nazara Tech. While the stocks with negative news flow, there's Hatsun Agro, Castrol, Rain Industries and Latent View. That's likely to perhaps open in the red. But, globally things have recovered, especially for crude. So there is some demand that has come back as recession fears have receded. Manisha Gupta is joining in for all the action there. Manisha, of course, there's the US inflation data that everyone's watching out for. But how is the commodity market shaping up?
Well, ahead of that inflation data, slightly choppy, as you can see. And having said that, we still are trading above $70 a barrel for both the crude varieties. And from the lows that we saw in the previous week, when the crude prices hit a low of 17 months, we've seen quite a bit of a gain coming in. So $3 up from the lows in the previous week there. The other thing that the street is watching is the reports that the U.S. will be replenishing its strategic reserves, which currently are at 40-year lows. So if that buying comes into the market, then you are looking at further support coming for the crude oil prices. Having said that, the EIA report that came in yesterday has cut crude price forecast by nearly 7% for this year, because they believe that the production from U.S. will increase by 5% on a year-on-year basis. So we are looking at higher supplies, higher inventories, but the demand really not picking up as so. In other metals, we are looking at copper, zinc, iron ore, even steel prices continuing to gain. So today is the third straight day that in the Asian markets, you are looking at positive trades coming in for many of these metals.
Okay, thanks a lot for that. Well, that's on, the commodities side.